What do we do here?
Well, he's the man to speak to in terms of the space, and he's been spot on. What do you do here? Well, I do think refiners can work. To Paul's point, if crude keeps going lower, gas sort of hangs in there. Demand, Valero is interesting here, but Chris mentioned EQT. That stock has hung around pretty well as well. Nat gas, downstream plays, clean energy. There are places to be, but the big cap, like integrated names like Exxon, which I'd loved, has not traded well now for the last couple months.
I think the context of this discussion is interesting when you have a Fed debating what's the bigger risk. Is it the growth side of the equation or inflation? And when I see crude at 57 today, all the energy stocks at new lows, the basic resource stocks, Tim, as you certainly know, have been weak. That doesn't seem like a very inflationary message. So I look at the macro ledger, and I still think the bigger risk is to the growth side, not the inflation side.
I think it's a fascinating time because I agree with you on the politics here. There's no question. We call it collusion. We want to call it. I mean, they're allowed to. Collusion sometimes is a naughty word, but I mean, if the Saudis want to play ball with the U.S., that's fine. And it means I think oil prices can go lower. Ultimately, the demand side of this is what we all get worried about. And I think Chris's question about the discrepancy or one's not telling the right story, the S&P or the price of oil. And I would get back to the integrateds, and it's been a very safe place to play. And I'm not saying I changed this view overnight. But there have been times where I felt very confident investing in the big integrateds, especially because of the free cash flow and the CapEx discipline. And that's something that I think you have to look at. If you are, I love Total and Royal Dutch Shell over in Europe because their break-evens are around $44.
Okay. But if what Paul says holds true in terms of 40, all bets are off.
Oh, look, all bets are off for a space that always overshoots, and the price of oil will overshoot. And we all remember the days when USO went to negative. I mean, I think we're all used to seeing the volatility in the energy space, and it usually leads the way.
I mean, you got to think of the last or maybe 2 bus cycles ago, beyond COVID, 1980s or something like that, where you got to be careful what you wish for, President Trump, in terms of lower oil prices.
No doubt about it.
And what it means for those regions, those jobs. I think they were talking about
that. Was the point.
Texas has been an economic engine.
There's a real fine line, real quick. And remember, it's during the first Trump administration. You can go back and look to Tim's point when you had a minus 40 front month crude for other reasons other than we're talking about here. But we went to OPEC and said, hey, you know what? You got to cut production. I mean, the price is too low. So we walk a fine line here in the crude oil world.
And, Guy, just go back to 2014, 2015. Don't have to go all the way back to the 80s. Yeah. I mean, there was an oil shock in 14, 15.
Well, there's a credit shock in that space, too. That's something that I think a lot of people are still, feeling the burn on.
Yep.